counting on the Fed to send interest rates all the way to zero?
What's behind this violent reaction to the minutes from the Fed? Let's ask our Bulls and Bears, Jonas Max Ferris, Todd Wildman, Gary Kaltbaum, and Peter Schiff. Jonas, first to you, is the market overreacting?
There's no way the market was expecting lower rates. If you were expecting lower rates than 2%, with inflation where it is now, you mentioned 1%.
Some people say 2% is inflationary.
We had 1% before, but we had deflation back then they were worried about. Now look at oil, look at commodities. There's no way they were going to go to 1% again. So I don't think that was in the picture. I think what is scaring the market now is the dire forecast for the economy. I think a week ago, everybody was getting pretty optimistic that we were in the turnaround. The bottom's in the housing market. So let's go. It's real to reach. And now it's not looking like that. Even though a lot of people don't believe in what the Fed thinks about the economy, the fact of the matter is they have a sourer opinion than investors did a few days ago.
Peter Schiff has been one person who has not been optimistic in any way, shape, or form. Anything in the Fed minutes that caught your eye that matters?
Well, not really. I mean, I think the market was going to go down today regardless of the Fed minutes. I think the most interesting thing is that the dollar didn't rise at all. Even though it was obvious that the Fed is done cutting, the dollar still sold off. And, I think the Fed is very reluctant now to raise rates. They should be raising them. I think they're going to try to talk tougher, but I think they're afraid to raise rates because they might raise rates and the dollar will fall anyway, and that'll really put them in a bind. They need to be substantially increasing interest rates, not just by a quarter point, but they should double or triple them, and that's probably not even enough.
All right. Gary Kaltbaum, you've been pretty good in your prognostications as well. What do you say about what happened today?
I just think the market hit a wall. We had a bear market rally for a couple of months, and we hit a wall at some very important resistance. But I want to talk about something that I've been saying for a few months here, and that's the consistency of what we hear from the people who supposedly matter most. In the last 2 months, we have heard from certain Fed heads that the housing was looking to stabilize and things were going to get better. Now we hear it's not. Of course you're going to get knee-jerk reactions when you have such inconsistency out of the talking heads out of Washington. The only thing consistent about them is they change their mind every 3 weeks and markets get driven up the wall. Thus you get a day like today.
Todd Wildman, you were on the trading floor. Tell us what that was like.
Well, I think people realize that the Fed policy now moving forward is cross your fingers and just hope for the best. Because you read those notes and they're just crossing their fingers. Come on, let's go. The minutes came down and we were down small, and then everything sold off and people just came for puts, and it just got sort of ugly, and there's just no optimism, and there's really, for the Fed policy, they're hoping, but down here there's really not a lot of hope. It's just a lot of bad news and not a lot of hope going forward.
Jonas, we had Vincent Reinhardt on earlier, a former insider at the Fed. He thinks that the real story with these minutes is not necessarily interest rates, but whether the Fed has overextended itself. Has it?
Well, there's certainly a sensation they're running out of tricks at this point. There's no more interest rate game coming. They have money left to loan to just about anybody found, but not unlimited money without causing rampant inflation.